So we're with Polar Capital Partners Fund Manager Ben Rogoff. Ben, good to see you again. Thanks for coming in. So as we were saying, Google earnings, all good. Tell me a little bit more about what's been aiding their numbers.
Well, I mean, the ongoing growth of e-commerce at the expense of other forms of advertising is the principal driver for the Google business. And I think from a bullish perspective, and I am a bull, it's the second biggest position in the fund, thankfully, it was very pleasing to see revenue growth accelerating across all geographies. I think one analyst this morning described it as the best quarter that we've seen from the company in 2 years. And I think that it was a timely reminder that there are other ways of playing some of these big themes, not just Apple.
Nevertheless, as we're hearing there, Google continues to play catch-up to Apple. Its stock hasn't been performing as well as Apple's. Talk to me about that.
Yeah, I mean, the stock has clearly lagged Apple's. Apple's stock has been stellar. It's over $300 today, and the largest technology company in the world by market cap, and quite rightly so. That being said, there's certainly enough room for two companies here, particularly smartphones, where a lot of Google's incremental growth is coming from, is still relatively nascent. 20% of phones today sold are smartphones, and less than 5% of those handsets coming from Apple. So I think the opportunity is still very big for Google. I think the trouble that investors have got there with the company is there's always something wrong with a quarter with Google. They either do the revenues, but then they disappoint on margins because they overspend. I mean, even this quarter, they spent over $700 million on CapEx, which is a very big number.
So how patient will investors be with that?
Well, I think they'll be fine. I mean, this is the funny thing about investors. When other things are going well, like revenues, you don't mind the company overspending on CapEx. I mean, just to put the numbers into context, $700 million in a quarter. They added 1,500 people this quarter alone and still managed to upside on the bottom line, on the operating margin. In fact, one of those bullish metrics in the quarter was an operating margin that was nearly 200 basis points better than most people had modelled. So that's what this company can do in full flight.
I mean, they're very creative. They've continued to make different investments, not just the search engine, cars, phones, and other things. Do you think investors will continue to support them in that enterprise, in those endeavors? Will there be some tension ahead about, look, we want the revenues now, we're not so willing to wait? Yeah,
no, it's a good question, because the company is notoriously paying away every quarter upside that shareholders might feel is theirs in order to kind of fund things that we don't know about. I mean, the Google Documents business hasn't really taken off. I read the other day that they're talking about cars that drive themselves, which kind of, as an investor, makes you...
Yeah, what do you think about that?
It just makes you nervous. It makes you think that the company is in a slightly different plane to the rest of us. Having said that, for the first time, they've told investors today that the display business is growing at, well, it's running at $2.5 billion per annum. They told us that the mobile business, which people have been very nervous about because of their head-to-head with Apple, is now growing at a $1 billion annualized rate. So I think what this quarter does is not just buy the company some time, but it allows investors to reconsider that stuff that we don't know about and give the company some optionality again.
OK, so what happens next? Can Google sustain this level of growth, and what do they need to do to beat Apple?
So it's a $20–30 billion gross revenue company, and it just is growing at more than 20% per annum. And my gut feeling says that can't be maintained indefinitely, obviously, at that size. Having said that, the stock itself is modestly rated. There's a lot of malaise in large cap technology companies in the States, companies like Microsoft, companies like Dell, Hewlett-Packard are all struggling under the weight of the iPad and these other forms of computing. Google is a beneficiary. So my gut feeling is the stock keeps working because it starts at the wrong valuation point and can expand from here.
OK, well, Ben Rogoff, great to talk to you. Thanks very much for coming in.